$400 today buys what $12 bought in 1971. The dollar's lost 90% of its purchasing power since 1971, and the government's still telling you 3%. The government's inflation numbers are a lie, and I'm going to tell you exactly why they are, and then why you need to calculate your own inflation numbers and figure out what your hurdle rate is. What's up, people? It's your boy Shubsy. In this video today, you're going to find out why your inflation rate is not actually 3%, or what it actually is, how much you're losing every year, and more importantly, what you need to do to not lose money every single year. Let's get into it. So I think everyone thinks inflation is just price inflation, but there's actually inflation. Inflation is just a supply. Think of it like a balloon just expanding, inflating, right? You put air into the balloon and it inflates. Now, people do that with money, or the government does that with money. So imagine everyone's playing Monopoly, we're having a good time, we have $100 in the whole system around all of us, and then the government, or the bank, they say in the game of Monopoly, inserts $100 more in, the total circulation goes to $200, and everyone's purchasing power gets cut in half. That's basically exactly how they do it, just at a way bigger scale with a lot of other factors that still lead to the same exact thing. Now, here's a video of exactly when we got off the gold standard, and a video from President Nixon from 1971.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
This is the M2 money supply, basically how many dollars exist in the world. And look what happened right after 1971. It literally goes parabolic, especially after 2008, and then again in 2020 with the COVID. Can I say that? With the vids. So in just 2 years, 2020 and then 2022, we printed 40% of all the dollars that ever existed. All right, I'm going to repeat that. In 2 years, we printed 40% of all the dollars that ever existed. And then people are wondering why housing is unaffordable, food is expensive, the middle class is dying, essentially shrunk. So here's a tweet from Spencer. He says, home prices need to fall around 40% or income levels need to rise 60% just to return the housing market to 2019 levels. That's 6 years ago. So there's a generational crisis, and the government's still telling you CPI is 3-4%. All right, I believe you, pal. So if we actually calculated inflation the same way we did in the 1980s, real inflation would be around, 15, 18%. It's not 3%, that's for sure. I don't think it has been for a long time. So I created this calculator just to show and calculate your own personal inflation. Because if you think about it, your inflation rate is essentially what you buy and what you want to buy in the future. So if you're saving up for a house, your inflation rate is going to be a lot different than, let's say, if you're just living in the basement. All right, so here's the inflation calculator that I created. You can plug in if you're a homeowner or a renter or what you want to be. You can pick your state. I just created this for the US, and then you don't have to change that. All you have to change in this is the housing basis, if you're a homeowner or a renter or want to be, and then the state. And then these are defaulted. They're pulling from, the housing data is pulling from the official data. Some of this other stuff is pulling from shadowstats.com, which is actually more realistic numbers than what the government reports in their CPI numbers. And of course, you can adjust them if you want to adjust them in the inflation rate, column C here. And then you'll get your personal inflation, and you can compare it with CPI. And then I have a little chart section here where you can see your purchasing power going down. How depressing. And how much budget, how much of it is housing. Usually most people's expenses are mostly housing, then food, etc. So for me, my personal inflation rate is 10.5%. That means I need to grow my money at least 10.5% just to break even. Anything less, and I'm losing purchasing power, I'm getting poorer every single year. All right, I put this calculator in the description so you can just click on it. I think it already takes you to a copy of it and just plug your own numbers in. you can mess around with it and see where you end up. You calculated your personal inflation rate. Now, what's the solution? How do we not lose our 10.5% or whatever it is every year? Let's look at the solutions, okay? We have Bitcoin, we have gold, we have equities. All right, so let's start with the S&P 500. I feel like everyone's telling you buy the SPY, buy these ETFs for the 500 stocks. S&P 500 sounds great on paper. Everyone tells you to invest in the ETF and you're doing great. But here's the thing. 493 of those companies are zombie companies. So look at this chart. This compares the earnings per share of the Max 7, which is the Apple, Microsoft, Google, Amazon, Teslas of the world. And it shows the other 493. So you see the other 493 in the white are just flat. And after ChatGPT here, they have the little boom here. But the Max 7 is the only ones really returning all the gains for the S&P 500. So here's another chart with the S&P 500 and the M2 money supply that we talked about earlier. You can see it really just follows exactly what the money supply is. It follows very closely. So the more they print, all that money goes straight into the S&P 500. What does that mean? That means the stock market isn't really growing in real terms. Nominally, yes, it's going up, but in reality, it's just keeping up with inflation. So if you look at this gold chart here, this is a better way to look at it. If you look at SPX, which is the 500 stocks, against gold, you can see actually you're down from 2005 compared to 2005. So essentially flat to down. So you would have been better off buying gold and just sitting on it for 20 years than buying these 500 companies, right? So the gains are essentially an illusion created by just currency debasement. Now this brings us to Bitcoin, right? There's 21 million fixed supply. No one can inflate it away. The government can't print it. It's essentially gold, but better. Okay, we're going to get into why. But you've seen all the companies buying it, the BlackRocks of the world, MicroStrategy, even some countries, El Salvador being probably the first one, potentially US being another one soon with the strategic Bitcoin reserve. So over the last decade or so, or even 5 years, Bitcoin has outperformed essentially every asset, right? Now, if you look at this chart right here, obviously it shows you the supply, the M2 supply we talked about before. From 2015, the US M2 money supply, this is just the US, by the way, not global, but US went from 12 trillion to 22 trillion, essentially doubled over the last 10 years. Bitcoin supply has stayed exactly the same, 21 million. Bitcoin is actually the only thing that's deflationary money. Here's a tweet. What you can buy today for $100 may cost you $120 tomorrow. Bitcoin was created to protect us against this inflation. Limited supply equals deflationary model, and yeah, it's the digital gold. Now let's just compare. I know this has been a chart heavy video, but let's just compare all the other assets that we can invest in to Bitcoin. Here is the Nasdaq against Bitcoin, or price in Bitcoin, and you can see it going down. Here is gold against Bitcoin, and you can obviously see it going down. Here's the returns for Bitcoin over the last 5 years, 54%, while QQQ's done 17, SPY's done 14, and gold's done 12. In the last year, gold's done well, 40%. Bitcoin's at 67%, QQQ's at 22, SPY's at 16. Now, I like to think of SPY as basically M2, so inflation. So depending on what you got in your inflation calculator, take that, subtract this number from it, and then that's your real return. So let's say mine was 10.5, I think. So that's public math here. That's 5.5%, right? QQQ's done a bit better. Obviously a lot better. Bitcoin's been the best. Okay. And now we can look at gold against Bitcoin, because I know there's a lot of gold bugs out there. And I can do another video on gold versus Bitcoin and why they're actually very similar, but Bitcoin is better, especially for this generation and the future. So you can see Bitcoin, price in Bitcoin going down and to the right? US money supply has basically hit an all-time high again. just in the last week or so. And inflation isn't going to stop. So what's the message here? Everyone needs to get into hard assets, whether it's Bitcoin or gold or even SPY, just to at least stay floating and not drowning. Now, ideally, obviously, everyone likes to make gains, but at least go into gold. Unfortunately, this fiat currency has pushed us so far into the risk curve that now just to stay afloat, we have to take risks, which is insane to think about, but that's where we are in this world. So just to recap here, your personal inflation rate, link in the bio, take that calculator, get your personal inflation rate, know that that's your rate to beat every year, and allocate your cash into those assets. Now you can decide whether you don't have to be 100% Bitcoin, obviously. Go 10% Bitcoin or 5% Bitcoin. And as you learn more about it, you'll get more comfortable and you'll start diversifying more. Go into gold, go into stocks if you want, individual. As we mentioned, S&P 500 is really just 7, maybe a couple more stocks that are actually doing most of the returns for them. Start dollar cost averaging if you don't want to sum your money into any of these assets. Dollar cost average. Calculators in the description below. It's free. It takes 2 seconds literally. It's going to go straight to the copy. And figure out your inflation rate and then figure out where you want to be allocated. Just know that the dollar that you think that your savings account, it's called a savings account, but it's literally not saving you. All right, guys, stay sharp. I'll see you guys next week.